Good evening, everyone. My name is Alec Wright, and I am the Chief Innovation Officer of OneValley, and we are incredibly excited to have you back for another OneValley pitch night, tonight focused on breakthrough early stage technology companies in the financial technology and financial services innovation space. We have, as if you're familiar with OneValley, recently or formerly known as GSV Labs, we host these pitch events, bringing together incredible founders across different sectors and industries. And we're so excited to be back for another pitch night after several months of being focused on the Entrepreneurship World Cup. As a reminder, at OneValley, we are an innovation platform. We are focused on supporting early stage entrepreneurs across every industry, technology vertical, predominantly initially in our innovation centers, where we've supported over 800 startups since 2015 that have raised $600 million. Hundreds of members participating in our centers, and then ultimately hundreds of thousands of entrepreneurs in our ecosystem through our various, partner communities and partner ecosystems. And one of our key functions at OneValley is hosting innovation events that bring the community together. And that's exactly what we're doing here tonight for the Fintech pitch series. At OneValley, we're also focused on providing support to entrepreneurs, regardless of whether they're in our physical innovation centers. And we do that through Passport. Passport is our virtual innovation center, 35,000 members on the platform, accessing and interacting with dozens of corporate partners, hundreds of investors, hundreds of mentors, and accessing nearly $1 million in discounted or free technology tools and services. And as a result of that, our average Passport member is generating hundreds of thousands of dollars in savings simply by being part of the Passport community. In addition to, Passport, we want to share a little bit more. And in addition to Passport, which is focused on providing scale access to our resources to any entrepreneur across the globe, we also have OneValley Ventures, which is our early stage venture investment group focused on funding dynamic founders in high growth industries, with one of our key focus areas being fintech in the future of commerce. So it's really exciting for me and the rest of the OneValley Ventures team to get to organize this event this evening. We'd also like to give a shout out and a thank you to Brex, both for their participation tonight and sharing some, insight around their journey and their experience, as well as their continued participation and partnership with the Passport ecosystem through the Brex Scholarship Program. And this is a program that's available to startups in the US that can get a full scholarship, free access to the Passport platform by applying to the program and by leveraging one of Brex's solutions, their industry-leading cash management accounts or corporate cards. So it's great to be partnered with, such a disruptive industry leader like Brex and bringing startup resources to the entire community. We have the chance to learn a little bit more about Brex's history and journey, emerging as one of the top fintech companies of the past 5 years, and a great conversation tonight that will be facilitated by my colleague, Seth Hauben, OneValley's VP of Business Development, with Larissa Rocha, Brex employee number 1, who's been there for the whole journey. With that, I'd love to turn it over to my colleague, Seth, to share a little bit more about your background and start the conversation with Larissa.
Yeah. Thanks, Alec. Super excited to be here with everyone. Obviously very excited to speak with Larissa. who is employee number one at Brex, about her experience. And just for a little context before we kind of jump into the conversation, I know Alec alluded to it, but Brex is one of the fastest growing fintech startups of all time. So naturally, we're really excited to hear Larissa's vantage and perspective with our fintech pitch night. But quite frankly, they're one of the fastest growing startups of all time. Just a little context and some numbers kind of behind that. But the business was founded in 2017. In less than 30 months, reached a $2.6 billion valuation, have raised over $400 million in equity financing to date. So needless to say, they have been very busy. But with that as kind of a backdrop, Larissa, I would just love to toss it over to you. Tell us maybe a little bit more about what you guys are up to at Brex and your experience as employee number one over there.
Of course. Thank you, Seth, and thank you everyone for having us today. Pleasure to be here. So I joined Brex 3 years ago as the first employee, along with Enrique and Pedro. Long story short, we met back in Brazil, where the three of us are from, when I was applying to colleges in the United States, and they were as well. Reconnected 1 month before graduation, my graduation in 2017, and they told me that they were working on a new fintech. Basically, they were working on a different company, one that had to do with virtual reality. And they, as they were doing that, they tried to get a credit card because around 50% of startups' expenses monthly require one: subscriptions, software, travel, rideshare, and every single bank turned them down. So they looked into the issue, studied the problem, spoke with different founders, and realized that they could pivot back to the industry of fintech and solve this problem of financial services, not only to startups, but eventually to other types of companies as well. So Brex started as a credit card that startups could get in 10 minutes, required no personal guarantee, no security deposit, has the most competitive rewards in the market. And it expanded as well into a modern alternative to a bank account, so a bank account replacement. And so in short, that is what Brex is. When I joined, I was in the, more like the finance and running some projections, some modeling around number of customers and early projections of revenue, things like that. And then I went to a project in regulation. After that, I became a recruiter for front-end engineers. Then I was the first full-time sales rep, and then moved to start the support team. So kind of started our support team from the ground up. After that, I went to marketing and then to business development and channels for customer acquisition. That's a little bit of, in a nutshell, what I've been up to.
Awesome. It certainly sounds like you've touched a lot of the business, and would love to just kind of dig in on a couple topics as it relates to this kind of mega scale and kind of extraordinary growth that you guys have experienced. But, I'm curious, kind of obviously the amount of money raised has been staggering. When this all started, the founding team was 22 years of age or right around there. And so I'm curious, kind of from your perspective, what resonated most with the investment community about kind of the concept, the idea that has ultimately allowed you to kind of raise the amount of capital you have?
Yeah, of course. So, over the years, tech has been removing a lot of barriers for companies to get started, right? And to run their businesses efficiently. So AWS came in with their cloud product to replace the need for physical servers and all of the infrastructure that came with managing that. Before Salesforce, you needed full teams to run data analytics properly and organize your pipeline. And Salesforce came to fix that aspect. Before Google Ads, advertising your products was something that was a pretty exclusive channel on television or billboards or radio, more expensive types of media, and Google Ads came in, and now you can pay as little as $100 and have a very targeted advertisement of your company, of your product. But nobody did that for finance yet. Like the average small business or the average startup uses around 6 different providers, combining financial services providers, different software, different tables, just to run their finances and keep their businesses and their expenses organized, and just being compliant. And that's very time consuming and very inefficient. And the vision of Brex was always to solve that problem more broadly. We are the combination of financial services provider in the form of a credit card, in the form of a modern alternative to a bank account, and the software that allows companies to control and approve their expenses, to issue cards and issue different controls for their expenses according to the different teams and management levels. And that is all in one. So that financial suite that comes to automate the search, a core part of our business, which is our your finances.
Makes sense. And so switching from kind of the finance hat to the sales and marketing hat and kind of the customer acquisition strategy. And for those in New York, Boston, and San Francisco, I'm sure familiar with the brand, but I'm curious if you could kind of surface the customer acquisition strategy. I know the group is really kind of famous for its marketing, but just what some of the most effective channels were that you've seen.
Yeah, of course. So, obviously this is not true for every single type of business, but in our case, we started with friends and friends of friends to gather feedback and put a product in the market as quickly as possible. The value prop that we focused on was a credit card that gave you much higher limits, right, to your company without the need of a personal guarantee or security deposit. We knew we had product market fit when random people we didn't know started emailing us saying, hey, I learned from so-and-so that you guys are doing this. I really need a card without a personal guarantee. And from there, based on the feedback, we were building other features. Once we raised our Series B and we were a little bit more comfortable in the sense of, okay, now we can explore different channels, we asked ourselves a very important question that is helpful to any companies. Where is your user base, right? What are they doing? Where are they going when they are at a stage where they need in our case, a corporate credit card? And by answering that question, by asking ourselves and asking like early users and observing where we kind of found them, initially, we came up with our first channel. So, the accelerator channel is one that worked tremendously well. We learned that content was also a great way to more organically bring awareness and eventually leads as well. We searched ourselves in the early day how to set up payroll for a startup, and we couldn't find a good answer online. Like that was seemed like a helpful answer to us. So we decided to document everything we were learning and all of the, how to build a startup hacks in our blog. And that brought us as well lots of traction. And we also tried different things. We tried some different forms of paid ads. We tried other channels like the accountants channel, because we save accountants so much time managing other companies' finances, was a very successful channel as well. But what is really important for us is from the very beginning, we built the infrastructure to be able to track where the leads were coming from and to be able to track a customer journey as they discovered and eventually signed up to Brex. Because this way we can assess what channels are working, which ones are not. It's definitely okay. And, it's something to be encouraged that companies starting out to test a variety of channels, but you have to have a robust way to track which ones are working the best, which ones are more efficient, and so on.
So certainly makes sense. And I'm curious kind of with that as kind of, call it the lessons learned, as you've thought about opening new markets and you've rolled out new products, Have you been able to translate those channels that were successful for the startup credit card to the e-commerce, the life science, the cash, or is each time kind of testing and finding kind of new channels that are most effective for the new markets?
Yeah, so it's, when you're looking at different verticals, or when you're not looking at different verticals, just like you should pay attention at the most frequent users, or the most frequent applicants to your product, or users, or whatever, that has a really clear pain point that you can't quite solve yet with your product as it is right now, but maybe you could if you did some adjustments. And that was the case for the life sciences, right? The biotech vertical, which we changed our rewards so that, instead of 3x on software, all of these things that are great for tech startups, but, biotech benefits more from, for example, 2% back on lab supplies and things like that. We adjusted our rewards to better fit that type of that type of user base. Similarly, for e-commerce, we saw a lot of e-commerce companies trying to apply for the 30-day Brex card as a way to breathe and to have some room as they were purchasing their inventory and then selling it over time. And Brex 30, as it was, like the first version of our product, wasn't really doing it for them. But with some adjustments, we were able to serve that base well as well. So this is, our approach to always be watching for who is the user base that's trying to get your product and trying to use it, but you don't quite solve their problem just yet.
Yeah, no, I think that's immensely valuable feedback in terms of flagging market signals and leveraging that to explore kind of new verticals. And so I'd love to shift gears a little bit just to the organizational scale. And as you think about scaling a business this fast, this rapidly, and just kind of touch on a couple of topics. And so in the early days, I'm curious what hiring was like and how you balance that need to get the right hire, but clearly hire rapidly. And so would just love to kind of hear your opinion about that kind of early growth from a hiring standpoint.
Yeah, hiring as a company on stealth that was not searchable anywhere, that nobody knew about, was extremely difficult, especially when it came to engineers. We tried everything that we could when it comes to LinkedIn, emails. That didn't really work out. We learned from this pretty talented head of talent guy that was a referral from an investor, a common investor, to do handwritten letters, because that was the way to catch the attention of candidates that weren't really paying attention to us on email or LinkedIn. So he said, well, instead of sending emails a month, focus on choosing 500 really, really strong profiles that he would be equally happy onboarding to Brex, and do some deep research on their background and on their skills and their interests and their experience, and how that could be a great fit at Brex and vice versa, and write some thoughtful handwritten letters delivered to their offices. And that was one of the ways at the time that we could increase the top of funnel in terms of candidates that were kind of for the first time agreeing to come and speak to us. Another way was to leverage each other's networks. So we were literally going over our own LinkedIns, and everyone were like, okay, how about this person? How about this person that you went to school with? Where are they now? Are they interested? Can you talk to them? Maybe they know someone. And our investors as well. One characteristic of hiring, especially both sides, but on the non-technical side, when it comes to compliance and finance, just because these are core areas for us, was to hire very senior executives who had scaled other successful companies, right? Key areas of successful companies of similar nature, from the point of startup to the point of scale. That was our CFO, Michael, who was the chief revenue officer at SoFi at the time. That was the case for our general counsel, Vince, who was the second lawyer at Stripe, so scaled the compliance team at Stripe. And, for those, leveraging our investor network, not only for referrals, but also for help, sitting down with these people and kind of sharing their perspective on why they should join Brex, was something that really took advantage of in the beginning as well.
Fascinating to hear about handwritten notes. I have not heard that one. That is tremendous. And so shifting to current times and kind of navigating the business through COVID, I'm curious how Brex has adjusted, adopted, maintained kind of the culture in these, fully remote times.
Yeah, so that's a very interesting question, because right before COVID, we were learning to be distributed. In the beginning, the very early days of Brex, we really valued having everyone on the same office and everyone working together all the time, because we were learning about ourselves and defining our culture. Defining our culture is really something that came from the ground up as we were brainstorming, what are we and what do we aspire to be? And we came up with our 5 core values of dream big, customer focus, be a fixer. So, don't stop at any just any barrier, keep pushing beyond reason to get to where you want. Owner's mentality, just like, no, there's no such thing as not your problem. We're all here on, united by a bigger purpose. We all have equity on this, and we should do everything that is in our power to achieve the collective success of the company, and seek truth. So the only reason why we were able to reinvent financial services and financial systems was because we didn't stop at the common answer of, oh, because that's how it's always been. We went deeply to understand the root cause of a lot of inefficiencies that we found in the credit card industry and the banking industry. And we really value that attitude of seeking truth and getting to the bottom of things, and ultimately improving how they are and rebuilding them the right way. So defining those was really important in the beginning. We turned down a lot of really, really talented engineers, let's say in Brazil, that could have worked at Brex and helped us move faster in the beginning, because we really valued everyone being all together at once. Once we had our culture and we had mechanisms to promote that culture and to keep that alive, and which, for example, every weekly all hands meeting, we pinpoint a culture point and we explain what value that person spiked on and why. That's just as a way as new people come in to keep reminding everyone of what our values are, and showing examples of our values in action. And then we decided, once we had that solid culture, that maybe we can be distributed, and maybe we can take advantage of different geographies for talent pool. Like Salt Lake City has an amazing talent pool for fintech. Vancouver has an amazing talent in the engineering scene. New York for finance and things like that. So we had offices in these different places. We were learning how to be distributed. We were, learning pretty quickly. And then the pandemic forced us to be remote. So now we had to build that muscle much faster. And a few things of what we did in terms of our organization. First was to, lots of meetings that were in person and lasted 2 hours and didn't really have, the decisions were discussed and made there. We moved them to a more memo format, where the stakeholders would write a memo 3 days in advance, share it with everyone that could potentially be impacted or had to have a voice in the decision. Everyone could leave their comments, ask questions at an not synchronized way at their own time. And a lot of issues were already discussed offline on the doc. Then once everyone was in the meeting, it was much shorter, much more to the point, and then only points of we could give a lot more time to points of a lot more importance, since the majority of other things had already been discussed in the memo prior. So this is one example, and that works really well, not only for the remote nature of the world we live in, but also other things like avoiding ideas that are just being showed more because they're coming from the loudest voice in the room. Everyone can, it's a more equal playing field if everyone is commenting on a doc versus having to speak up in a loud room. So there was a lot of that. We were very passionate about this whole remote world. I don't know if you saw, but we just announced that we are going remote first. So Brex will be designed to be remote. We're not going to have the offices like we had before. And one of the ways that we are doing this is by what we are cloning the internet, right? So if we look at history, we create the tools, right, that kind of drive our work in our society, and then we organize around those tools. So cities were completely designed around the car, right, around the automobile. Look at our streets, our garages, and all of the traffic lights and all of those things. The living room was a completely different way when the radio was the main source of entertainment, and the television came and rearranged the living room. And then now the kind of like more decentralized content consumption on cell phones and computers is, also changing again the way that kind of we organize our household. And so this is just another one of these tool and channels challenge. The internet already solved a lot of the problems that we are worried about losing by moving away from an office structure. For example, you worry that people will have less of a sense of belonging. Okay, yes, like we're not bound by a physical space, but look at all of the YouTubers with a massive following who never really met their followers or like loyal followers in person, right? But yet they are able to generate such an important sense of community and sense of belonging. So we're trying to look at different corners of the internet and see how we can improve, working and intentional relationships and operations in a world that is now remote first.
Really appreciate hearing that. Super exciting. Larissa, I could chat all day. I think we're running up on a time constraint. And so I certainly want to, on behalf of everyone, say thank you so much for your time, your insights, sharing your story with us. We're out of time, and so we got to toss it back over to Alec so we can hear some great startups pitch.
Sure, it's my pleasure, and good luck, everyone. Excited to see the pitches.
Thank you so much, Larissa and Seth. That was just an amazing conversation, both about both the strategy and tactics of the early Brex days, as well as, some of the dynamics of kind of this incredible transition to remote as a fast growth, kind of a highly disruptive company. So incredibly exciting conversation, and we can't see what Brex, we can't wait to see what Brex is going to do next. Now we're going to transition to our fintech pitches. We have 8 great companies here, all hoping to be the next Brex, all working to change how people or businesses do commerce. And what they really, while they're all approaching it from different directions, what they have in common is that they're building exciting, disruptive early stage companies. So, we're really excited to get into the pitches. And we have 4 great judges with us this evening who are going to be, listening to these pitches, evaluating them, asking questions, and ultimately scoring all of the pitches to help determine who walks away with the prizes. We have Michael DeAngelis, who's the Director of Corporate Development at Fidelity. We have Timothy Lee, who's the CEO of Alchemy Technologies. We have Megan Lookabaugh, who's the Senior Product Manager at Upgrade. And we have Juan Scarlett, who's a managing director from the OneValley Ventures team. I'd love to just take a moment and have each of our judges, give a 30-second introduction to themselves and share a little bit about, what has brought them to the fintech space. Maybe Juan, do you mind starting us off?
Sure. Thanks, Alec. And Thanks everyone for tuning in today. As Alec mentioned, I recently joined the OneValley team to help lead and launch OneValley Ventures, which is an early stage venture capital effort that will invest in pre-seed, seed, and post-seed companies with dynamic founders using next generation technology to solve high value problems. We expect mostly to source our investments primarily from the vibrant OneValley ecosystem and the ecosystems of our partners. Prior to joining OneValley, I led the venture capital efforts for Nimble Ventures, where we primarily invested in seed to expansion stage enterprise and fintech and health tech companies. And I've worked in technology investing and research for the past 20 plus years. Fintech has always been an area of interest for me. I've actually, having worked in the financial services industry in one role or another for probably the last 20 to 25 years, I've kind of, in a very firsthand, real way seen the inefficiencies from the use of legacy technologies and/or the slow or no adoption of next generation technology. I'm very happy to see that's really been changing in a very meaningful way over the last 8 to 10 years, as new challengers have really stepped into the many spaces left by legacy financial services providers. So continue to be very excited about fintech and its outlook.
Thank you so much, Juan. Megan, do you mind giving us 30 seconds on your background in relation to the fintech space?
Yeah, of course. Hi, everyone. I'm Megan. In terms of my background, I've spent my career in performance marketing and growth for various fintech companies, largely in the consumer lending space, but also in insurtech and real estate tech at various points before transitioning fully to product management more recently. What gets me most excited about fintech, and I think what has kept me, excited for a really long time, is just the idea of building products that make it easier for consumers to do the right thing and make smarter financial decisions, and making that easy and, even when possible, enjoyable. I think that's super motivating and exciting, whether it's help people save money, pay off debt responsibly, build wealth. There's so many different ways that you can make a really big difference in someone's life. And I think fintech companies today have a bigger opportunity than ever to help consumers and businesses during this really challenging time, and continue to, accelerate the rate of making their products better and serving people better. So really excited to learn more about each of your products and companies today.
Wonderful. Thank you so much, Megan. I'd love to throw it to Timothy. Do you mind giving us a little background?
Sure, Alec, thank you. And thanks for the invitation. Looking forward to all the pitches tonight. Super excited about this opportunity. I started my career off as a hardware engineer working for Intel Corporation. I worked on a team that transitioned Apple from IBM processor to Intel Inside. And as of late, they finally figured out to design their own processors 15 years later. Fell into fintech. I got recruited by JPMorgan Chase to build a lot of their retail banking technology, from scanning a check with their mobile phone front and back to you can deposit anything into an ATM machine without the envelopes anymore for those of us in our advanced age that remembers that kind of stuff. Kind of just fell in love with it in banking technology and fintech technology. Worked on chase.com. It's all normal now, but back in the days, there's no online banking. Worked at Elevate Credit, consulted at Prosper Marketplace, Cabbage, Loan Depot, Realty Mogul. Basically spent a lot of time in all sorts of personal loans, crowdfunding, real estate, small business lending. And now I have my own company building very specific customized software for fintech companies and banks around the world. Thank you for the opportunity.
Thanks, Tim. And certainly last but not least, Michael, do you mind giving us some background?
Thanks, Alec. And thank you for having me. Mike DeAngelis, again, work at Fidelity on the corporate development team. Quickly, corp dev for Fidelity is really the group that looks at the strategic investments and acquisitions that the firm pursues with external companies of any stage and size maturity. So We've got a team around the world that align with our 7 core business units across our institutional channels and retail channels, workplace channels, as well as our technology and operations groups around the world. So we are, again, strictly meant to be focused around the strategic investments that the firm makes, where we've got a commercial relationship with a partner as well. So joined fairly recently. Before this, I was spent 2 years with a company some of you may know, Fintech Sandbox, helping early stage entrepreneurs, primarily in the cap markets sector, get access to premium data sets. So we brought a group of institutions and large data providers together to help do that in a value-added way that helped them got to work with the folks at GSV, OneValley, and it's been an awesome ride. So yeah, excited to be here. Thanks, Alec.
Thank you, Michael. And with that, we're ready to get to our pitches. As a quick reminder, we want to thank all of our partners who helped make this possible and helped us source amazing startups here tonight. And they're all competing for up to $10,000 in prize value. The grand prize winner will get $2,000 in cash. We'll get a free Passport membership, and then we'll get free membership to our Innovation Center for a year. And we'll also be giving a People's Choice Award for the audience favorite vote. So please, as an audience member, don't forget to vote. You actually can ask questions in the chat. I'll be keeping an eye on that. And as we have time, get them into the startup Q&A. You can rate the startups by signing into the platform to help choose the people's winner. And if you're an investor or a corporate, please feel free to request a connection via the platform with any of the founders, and they'll get an email about that. So we'd love you to be participating and engaged in tonight's event. And, we've got 8 incredible startups. We have Sindhu Joseph from Cognicore. We've got Evan Olinger from Golden, Karen Monahan from Boss Insights, Christian Lamar from Centra Credit, Michael Young from Photon Commerce, Mike Trigg from Russell, Aaron Huang from ProductFi, and Christina Chi from Data Bento. So these are who we're going to be hearing from in the next hour and a half or so. And we're ready and excited to get started with our very first presentation. It's my pleasure to welcome Sindhu Joseph, CEO and founder of Cognicore, to the virtual stage.
Hi, everyone. My name is Sindhu Joseph. I'm the CEO and co-founder at Cognicore. Cognicore is an AI-powered digital assistant platform for financial services, especially for wealth management and insurance carrier space. Yeah, Alex is a financial advisor. His objective is to help his clients reach their financial goals and secure their future. But unfortunately, Alex spends around 60% of his time in operational tasks, such as filling up forms, opening accounts, consulting the policies, etc. Financial and insurance firms have tens and thousands of advisors and agents like Alex. They try and help Alex by scaling back office support staff, but this is extremely costly and not scalable, especially in today's world. The market for digital assistants is rapidly growing at a rate of 35% and expected to reach a $45 billion in the next few years. So how can we achieve operational efficiencies at scale? Cognicore Sira platform is an answer to that. It is an end-to-end no-code platform designed for business teams in financial firms to create digital clones of your best service or salesperson. Advisors can interact in natural language and get help from the assistant in filling up forms, navigating complex advisor dashboards, finding relevant policies, and staying compliant. We have a financial layer built into the platform with prepackaged use cases that are on top of the call volume drivers. The result of this, every back office process can now be completed in under 2 minutes, delivering impressive ROI for firms. Firms like Bank of America and Wells Fargo maintains around a 200-member team to deploy and scale digital assistants, whereas Cognicore's customers only need a 3-member team for the same task. This unparalleled scalability is due to its revolutionary technology based on knowledge graphs and deductive reasoning, and it is explainable for regulators and unbiased for its users. As AI is taking over our lives, the ability for machines to understand and communicate with us is one of the most important challenges that we will need to solve in the next decade. Cognicore's team, with its expertise in artificial intelligence and financial services, is uniquely positioned to solve this challenge for the financial market. Our AI technology comes from my PhD in artificial intelligence, 6 patents in machine learning, and a deep understanding of human conversations. Our leadership team and advisory board consists of ex-CIOs of major financial firms. Since launch in 2018 in the US market, we have an exciting revenue traction with 1.5 million revenue this year from category-leading financial service firms, most of them switching to Cognicore from Microsoft Cognitive Services, Salesforce Einstein, and Amazon's Lex platform. Our customers pay us between $250,000 and $500,000 in an annual subscription basis, and we are ready for an explosive growth through direct and partner channels like Oracle and BNY Mellon Pershing. Our big and bold vision is to be the platform of choice for financial services and create an ecosystem around Sira, similar to Alexa skill developers all over the world. We invite you to join our 5 million series round to solve this great challenge for financial businesses around the world. Thank you.
Thank you so much, Sindhu. Really exciting to hear about the progress and traction in Cognicore. It's incredible momentum to date. I'd love to throw it to our judges for any questions. Maybe Juan, do you want to kick us off?
Sure. Thank you, Sindhu. I guess I'm curious how much customization and/or configuration is required for your customers to really get up to speed in running on your solution. It sounds like you do give them the option to use your platform to create their own digital versions of forms and other items. But I guess I'm curious, how quickly can customers see value from the solution?
So our latest customer, Ameriprise, configured the solution within 8 weeks. We did the integration with an enterprise CMS system. We deployed on top of Pega systems and configured the knowledge base all within 8 weeks. So it is an end-to-end no-code UI-driven platform that allows knowledge engineers to quickly connect their backend content systems and pull in the knowledge. And also we have all the CRM connection like Salesforce, Dynamics, that allows you to quickly pull in data that is customer related. And to give you an example, around 13,000 or 15,000 articles can be configured within the system within a matter of 2 to 3 months.
Thank you.
Thank you. Any other questions? Maybe Megan, anything on your side?
I have a question on your partnerships acquisition channel. How does that work today? And what are you kind of doing now to continue to scale that in the future?
Yeah, so right now we are a very, very small team in terms of customer acquisition. So we are looking at really category leading firms, and that's why you see the logos on the presentation. But as we are going forward, we are also setting up 2 types of partnerships. One is the BNY Mellon type of custodian kind of partnerships, where they have around 300,000 advisors on their platform. And what we are discussing is a platinum partnership, which will allow us to reach all our independent broker-dealer customers through their NetX 360 platform. The other kind of channels is like Oracle, like technology partners, where we can sit on top of Oracle's Knowledge Advanced, and this becomes like a real add-on for a mutual win-win for both Oracle as well as for Cognicore. For Oracle, a content management system that is one-dimensional suddenly becomes multi-dimensional, and you can ask any questions on a 60-page document, and you will get a very precise response. For Cognicore, we are getting access to a large sales force, and you can really deploy it anywhere Oracle is there. So right now we are still going, looking at Oracle customers, and we are selling, but within a 6 months or a year, we expect Oracle Salesforce to sell this for us. The same goes to Adobe Experience Managers. So there are a couple of such partners that we are really looking at.
Thank you. Any question, Michael or Timothy?
Yeah, I have a quick question. Great presentation. Thank you for sharing that with us. I have a bunch of questions. I'll stick to one. What is your pricing model? I know there's an accelerated revenue growth for the past couple of years, for the next couple of years. I guess the way you priced, the last 2 years is dramatically different how you're pricing it going forward. I'd love to hear about that.
Yeah, so our pricing is we are targeting the enterprise layer. So the pricing is $250,000 to $500,000 on an annual subscription basis. And this can really, within an enterprise, this can really scale internally. So for example, LPL, we signed them on 2019 January with a 400,000 annual subscription. And starting January 2021, we are going to become a 600,000 subscription. So we can, this is without really having an account manager dedicated for LPL. We can really grow up to 1 to 2 million per these kind of large enterprises. So that is the enterprise pricing. But we also can expand to mid-market, where the pricing would become 100 to 250K. And in terms of if you compare this to kind of a CRM license, it is around 60 to 100 per seat license for advisors. And this would be more interesting for a mid-sized kind of market.
Sure. Do I have time for another follow-up, Alec?
We're going to be running this pretty tight,
No problem.
and I'm sure we've got a bunch of questions. I want to give Michael a chance if he has anything he wants to get in quickly.
I'll give it back to Tim since he's got a good. It sounds like he's got a good one.
Oh, there we go.
Use the proceeds for $5 million. Sounds like you're breaking even already. I'd love to hear how you're going to spend that money. Thank you, Michael.
What was the question?
Use of proceeds on the $5 million.
Okay, so we are looking at expanding our sales and marketing operations. We have a pretty matured product. We also have a roadmap that we want to really implement, but our most important use of proceeds is for sales and marketing expansion. And really, our big vision of making this the de facto platform, so that not only Cognicore engineers are building these use cases, but everyone within the digital teams and business teams of these financial enterprises can really contribute and make it a very streamlined process, so that every new deployment becomes faster and faster.
Thank you so much, Cindy. It was a pleasure hearing from you. And again, congratulations on the progress.
Thank you for the opportunity. Bye-bye.
With that, I would like to move to our second presenting company. It's my pleasure to welcome Evan Olinger from Golden to the virtual stage. Hi,
Okay.
Evan.
Apologies for that. Ready to go. So welcome to Golden, financial care for parents. And just as your parents cared for you, in turn, my screen is freezing. Come on. In turn, we will be caring for them, a lot of them. And Golden is a pre-seed SaaS company in market with 50K MRR. We are engaging the fastest growing, wealthiest, and yet largely unaddressed fintech market opportunity. So when mom does fall and goes into the hospital, how well prepared are you to protect her from fraud, to pay bills, to find critical government benefits, to pay thousands for home care? Today, 20 million seniors can't manage their finances. The need for connected financial care, especially with COVID, is more urgent now than ever. Golden's app connects to 19,000 financial institutions, secure, view only. And then Golden's proprietary data analytics simply alert the family and the senior when mom's bills are due or an expense like a cable bill doubles. We alert to elder fraud that targets seniors every day. Uniquely, we means test mom's finances to automatically qualify for government benefits, and with Golden's market partners for traditional financial, legal, and wealth services. We start with seniors' financial reality. On average, Golden's impact is to increase a senior's income by 10 to 20% within the first 6 months. The key is Golden's focus, not just on net worth, but on actual expenses, benefits, fraud, and family. We call this wealth management from the bottom up, and it also helps our customers pay for Golden. Golden was launched in September 2018. We're on target for 4,000 paying customers, 12,000 family users by year end. And recently we passed a key milestone of 50K in monthly recurring revenue. Golden is a SaaS with value-added services business model, combining subscription fees, referral fees, and financial coaching. We are also seeing a family network effect with a 42% organic customer referral rate. To reach millions of seniors and families, Golden has one primary market partner channel, financial services, and two connector channels, healthcare and senior services. In financial services, we're in pilot pipeline with major banks, advisor platforms, and insurance companies as a customer loyalty solution, helping them win the boomer senior market, which holds 80% of US investable wealth. In healthcare, we are working with Medicare Advantage plans to reach 17 million seniors as a how to pay for mom's care supplemental benefit. So take a moment. Imagine a bank that built loyalty by helping me secure mom's health, financial health, whilst winning the family as a customer and retaining its assets. Or imagine a Medicare Advantage plan that helped pay for mom's care. Now that's the generational power of Golden. Combined, Golden's team has experience across 5 startups, 3 successful exits, and scaled growth in financial services from 0 to 1 million customers. And every person we hire has taken care of a senior parent. We're Golden, leading the way in financial care for our parents. Thank you.
Evan, thank you so much for the presentation. And, you know, I got to say, it's just so wonderful to see the work that you're doing here, as there are so many people that are, you know, trying to support their parents as they age with dignity. It's so exciting to see, you know, technology being applied to these type of challenges. So it's awesome to see this work. I'd love to throw it over to our judges for any questions. You know, maybe Timothy, anything. You want to make sure you get your questions in. Any questions that jump to mind for you?
Evan, this is great.
Thank you.
Super relevant. You're dead on the 75 million boomers supporting 50 million seniors. It's a big problem to have, especially our country's sort of aging population. You know, I thought about building something like this myself to help my parents. I even registered a company called boomerfi.com, which can talk about it later. Great concept. I love the identity protection. I talk to my mom all the time. She will get emails from a bunch of folks and just don't know what to do, right? Some that is real, some that is absolutely. So just for that value, it's worth every $20 I spend every month to kind of get this thing on hooked on. I don't have any questions really. I was curious about whether you're raising money or.
Yeah, so we are in the process of doing a seed series. We bootstrapped to date because we know we're pioneering a new market category in fintech. And we knew it would take 3 to 5 years just to kind of get real engagement with the market. Now that we're entering our growth phase, we're going to be raising a seed round, tentatively targeted at 3.5 million, probably Q2 of 2021. So we're excited to do that. It's about time.
Cool. Yes. I don't. Yes.
Yeah. And just to say, that'll be used for sales, marketing primarily. It's not a big tech build. It's really an engagement with the market, staying repeatedly in the channel, building up awareness, and obviously investing in market partnerships via pilots initially.
Exactly. Great.
Thank you.
Concept.
Michael,
Thank you.
looks like you might have a question.
Oh, yeah, it's again, yeah, awesome. Good to see you, Evan.
Yep.
Question, well, I guess a two-part question. The three categories of revenue you broke down, right? The $20 a month charge for the ultimate user. I guess amongst the three revenue streams, right? The breakdown in which is fastest growing that you're seeing through the MRR that you're bringing in, and then I guess on the specific $20 a month for the user, why that versus some other competitors who are going to the family and charging the family to pay for it?
Yeah, so number one, our target customer is the tech-savvy adult children. They're our primary user and primary payer. The seniors are primarily our beneficiaries. And we have some very tech-savvy seniors too, but typically it's the adult children being engaged to care for their parents. Secondly, 84% of our revenues right now are from the reoccurring monthly subscriptions. 4% are from referral fees, and the rest are from financial coaching. 26% of our customers use the financial coaching. This is a demographic that is not robo-advising, leaning. They really need to know that there's a human being. And we found and A/B tested the fact that a little bit of human engagement goes a huge way in building trust and long-term engagement across the family. So
do you think that's scalable?
It is scalable, one, because it pays for itself. Two, because yes, it's a human challenge to scale human-based services. We've tapped into a very interesting labor market, which is kind of retired CPAs and financial people who want to keep helping seniors and work from their home. And three, our team. I have a background at AT&T and huge call centers. One of my other co-founders has a background in customer training and services. So we understand the challenge in front of us. And fourth, we know that as we scale, we'll be working with our market partners. You already have call centers, advisors that we can kind of leverage some of that human coaching off to as appropriate, because you're our partners. And they want to hear, our customers want to hear from advisors as well. We're not trying to be advisors or investment brokers. It's not our, there's lots of good people out there, hopefully, doing that.
Thanks.
Any questions from you, Megan?
Yeah, that was a great transition from Michael. I was also wondering kind of who you really market to, whether it's the children or the parents. So that makes a lot of sense. So I guess like building off of that, what does the product engagement look like for both of those different groups? So for how often are the children engaging with the product versus are their parents engaging with the product as well?
Yeah, so we don't really try to separate that tremendously, because we recognize there's times as families have discussions around financial health, paying for assisted living, paying for home care. I mean, these can be six-figure decisions. So, there's times where it's just, I get a fraud alert and I need to check up on mom, or I see that the cable bill's doubled. I'll call the cable company. Or I see mom qualifies for a government benefit. Great, I'll spend half an hour on Saturday and get her signed up. On the other hand, we have very active seniors who, especially women, who, are generally live longer. They end up in a situation where they're more isolated, and the ability to be alerted for fraud, to be alerted when they qualify for benefit is important too. So we don't try to really put boundaries on it. We do recognize that you always have to have a human being at their disposal if they need to talk to somebody. Most of the time they don't, and secondly, that it's important to engage the family. The behavioral dynamic here is nobody talks about money. Nobody. And what we're doing is engaging the family to care for mom or dad in a very simple way and get them having a virtuous relationship around money. And that's going to take time, and it evolves over time. So it's part of our life cycle is we build a lot of customer loyalty by engaging our customers as a family over time. And that's the payoff for people like Fidelity. Get the cross-generational relationship started. Yeah.
That's some good partnership development right there. I want to throw it to Juan in case he's got a final question.
Yeah, just real quick. Well, one, thank you, Evan. Really interesting solution. Yeah, I guess just had one question. It sounds like you guys are mostly focused. Most of your revenue generation efforts on the subscription fees thus far, but there's obviously a very big opportunity for marketing and referral fees from partners.
Yep.
How quickly do you guys think you'll start revving up the engine on that particular part of the business?
So I mean, like I said, it's 4% of our revenue right now is the referral fees. We have some very basic services in place like LegalZoom for legal wills and trusts, and some basic financial services and some government agency connections. What we see is we know it's all about scale. So referral fees, like Credit Karma has taught us, once you got scale, you can really create partnerships, do it ethically, do it transparently, but do it to the benefit of their customers in a very personalized way. So by having access to the financial picture, we can pre-qualify leads into those services. We think it's going to take probably 3 years out before that revenue stream, 2023, starts to really become 15-20% of our revenues and grows from there. So it's a challenge. I mean, it's a challenge to build out a market partner place. No question. Yeah, but people have done it, and we can do it.
Thank you so much, Evan. It was a real pleasure learning about Golden, and it sounds like you've got some really exciting traction and hope that just continues to grow for you. Thank you for joining us tonight.
Cheers, Alec. Thank you.
Wonderful. I'd like to move on to our third presenting company. It's my pleasure to welcome Karen Monahan from Boss Insights to the virtual stage.
Hi, everybody. So great to be here. My name's Karen Moynihan. I am a former commercial banker, second-time founder, and I'm here to chat with you about how business banking is broken, and with access to real-time data that integrates seamlessly to core systems and loan operating systems, Boss Insights is here to solve that. So we know that the business banking system is challenged, but CB Insights really helped us by explaining why. Over the past decade, banks have lost their market share. It was a slow leak at first, 1 to 1.5% per year. But over the last year, during COVID, they lost 9%. That's not a slow leak. It's time to call in for repairs. And with it being a $5 trillion market, there are a lot of suggestions out there, but they don't perform on the KPIs. Well, Boss Insights is here to show how we have been doing that. What we're providing is a single API that bridges the data gaps between businesses and the lenders who are looking to serve them. We give them access to data on demand so that they can seize it and capture the business lending market. And you don't have to take our word for it. Square is using technology like this, and they closed $820 million in a few quarters. It's 60% of that was new business. So there is no question about it. Banks have to decide how they're going to approach this challenge and overcome it. We are in market today, and we are proven and trusted by innovative financial institutions. In one more slide, I'm going to show you the results from our case study with CC Bank of Utah. A few weeks ago, we were on a panel with CIBC, which is a large financial institution, and they discussed why they had to solve this particular challenge and why they chose Boss Insights to do it. And we're really proud to be one of the 3 fintechs in market chosen to go with Oracle to address this challenge. So here are the results. When you have access to data on demand on your business customers, you can process 50% more applications. You can save 80% on the time, not just to decision the loan, but also to service that loan. And over the course of the relationship, the amount of manual work that I had to live through as a commercial banker, and the businesses more importantly had to live through, is decreased 90%. It's staggering. Here's what we're offering: instant access to financial information, banking, and commerce. This is the type of information that lenders need to get access to in order to approve a loan, and they're doing it one at a time linearly. Here we have access in under 1 minute to the information in a way that you can decision it, and then you never have to request it again from that business borrower. You transform yourself into a relationship manager instead of an order taker, and also someone who's a little bit annoying to that business because you're asking for this information, the financials, then you're breaking them down and sending them to credit. Instead, you have this easy button that allows you to get it in real time and decision it and service this customer properly. We have a diverse and experienced team at Boss Insights. I come from commercial banking, so I've experienced the problem firsthand, but we were built by somebody who scaled 3 tech companies, including Amazon. So we are a tech-first approach. Our head of product is from TransUnion. Our VP of sales is from OnDeck, a private lender. We also have diverse and robust advisors coming from banks and other industry organizations. And we were really humbled to win a few awards this year. We're very proud of it. The 2020 Unicorn Challenge winner and the 2019 top leader in lending. What sets us apart is our moat. We have notable IP that allows us to gather the most robust form of information, and not just the data, but the insights. That's the X factor. But on top of that, we have the easiest way to adopt this type of platform globally. It's not code, it's sign up for this form like you're signing up to LinkedIn. It takes 1 minute. And as a result, we're getting more traction and adoption, and we're trusted by people in market. Our revenue model is aligned with the growth of the customer. I'm skipping because I'm being cognizant of time here. We have doubled our revenues from last year and are on track to triple it in the next few months. We will be getting 7 figures of annual recurring in 2021 and profitability in 2022. And our raise is to invest in our tech team and our sales engine. So I've thrown a lot at you over the last few minutes. So I just want to say 3 reasons why we are a 10x opportunity. The digitization that we were expecting in 2030 is happening in 2020. And if you're looking for an instant solution, not something you have to code to, we have that. It takes a minute to sign up. And that's why we're getting these results for our clients, like 50% more loans processed and 90% digitization on the servicing. Thank you so much. I'm really excited to hear your questions, given the expertise of the judges.
This is great.
From the loan operating software system, I just said software system. I can't wait to chat with you, Timothy.
Yeah, this is Tim. Well, hey, yes, we're building a PPP platform right now for a major bank. I just slacked your website to the group.
Oh my gosh.
Love to talk to you afterwards.
Let's do it.
Yes. I don't have any questions. This is like, reminds me of Alloy, but for business. You know what I'm saying? Alloy could connect all these APIs. You call them once and they call everybody else for personal lending and all this stuff. But we should definitely talk, because right now we're dealing with OCR technology to scan through payroll records and all that stuff. This might help me.
We always say that digitization in the market is always thought of as an offer on switch, but there's sort of like a roadmap, and OCR is one of those things you kind of get stuck on. But with API, you set it and forget it. And it's interesting you bring up Alloy. We have a partnership model. So we will ingest data from other platforms, and it's meant to be a one-stop shop. I really can't wait to get into it with you offline.
I have any questions? This is great. Thank you.
Juan, it looks like you have a question. By the way, everyone, Alec is experiencing a little bit of internet issues, so I'm going to jump in and moderate the questions until he's back online.
Thanks, Tara. And thanks, Karen, for the pitch. Really interesting product. I did have just one quick thing, and since you didn't get an opportunity to talk about the business model much, wanted to give you an opportunity now to go back and tell us a little bit more about that.
Thank you so much for allowing for that. So B2B SaaS, and we align ourselves with the growth of our lenders. So we're supporting private lenders and community banks, and then some of the largest institutions. We're not charging per data because that makes them think about what data to gather. We are charging per borrower. When they earn, we earn. When they don't, it doesn't happen. And we have 3 approaches to market. We have direct through our channel partners like Oracle or a top 4 accounting firm, still confidential. And also we have some thought leadership. So in a few weeks, we're going to be on the Cornerstone Advisors Fintech podcast. We're really excited to be chatting with Ron Shevlin on that. And then in a few weeks, we're going to be demoing at Finovate. That's some of the thought leadership. Thanks for the question.
Thank you.
Megan and Michael, do either of you have any questions?
I'm interested in kind of the volume you've seen through COVID and response from customers that you had in pipeline or were onboarding as clients, and then that'd be another interesting piece, just client onboarding as you bring people in and ongoing management of relationships as they probably grow.
Yeah, there were seasons of COVID. So at the beginning, when we didn't know what funding was going to take place, Boston Sites offered our tech for free for any lender that would support businesses. We're customer first, not profit first, meaning that what we're looking to do is delight that business customer who's been suffering through pains forever. And in that, that's why we're growing, because we're always focused on the end customer. And we got featured in Forbes, and then that was that. There was a lot of interest that came out of that. At the moment, what we're seeing is that people have really brought forward data and digitization into this year's mandate to get started next year, and our pipeline has exploded. That's why we had to bring on a VP of sales, not just an account executive. We're going to be growing our sales team significantly in Q1 and Q2.
Awesome, thanks.
Thanks for the question.
Thanks, Karen. Megan, any final questions from you?
Nope, no further questions from me. Thank you, Karen. That was really great.
Thank you guys so much for the opportunity.
Wonderful. Thank you again, Karen, for joining us. And with that, we're going to go ahead and move on to our 4th presenter. We have Christian from Sencha, and I'm pleased to welcome him to our virtual stage.
Hello, sorry about that. Can you guys hear me well?
You're coming through, Christian.
Perfect, perfect. Hi, my name is Christian Lamar, and I'm the co-founder of Sencha Credit. Oops. Technical difficulty, sorry about that. Give me 1 second.
It's okay, take your time.
Wait, sorry about that,
Not a problem, Christian. Feel free to take a minute.
Okay, I'm gonna give it let me start it over, sorry. Okay. Perfect, okay. Start from the top. Okay, hi, my name is Christian Lamar, and I'm the co-founder of Sencha Credit. 113 million people in the US have no credit or bad credit history. Current credit cards are harder to acquire by those with bad or no credit history. Now, what does this mean? This means there are restricted access to home ownership, access to an education, access to certain jobs, and access to starting a business. I've witnessed my mother suffer from bad credit ever since I was young, and it negatively affected our lives. We have been unable to purchase a home for our whole lives, and it forced us to move from apartment to apartment. In addition, my mother's poor credit almost forced my brother to drop out of college due to his inability to acquire a loan. And these situations have definitely occurred in the lives of many others. This has made me aware that credit creates an uneven playing field. And while we can't revamp a broken system, we want to provide solutions to empower people to build credit and reach new financial heights. That's why we created Sencha Credit. the next generation of secured credit cards. We're coining it a credit card. On the front end, it works just like a debit card. You can only spend what you deposit. On the back end, it works like a secured card. Users are borrowing against the funds that they deposit, but rather than having a pointless security deposit, we're creating a variable deposit. Unlike traditional credit solutions, this allows us to approve nearly anyone, regardless of credit history, eliminate fear of debt, eliminate unnecessary fees, allow users to set their credit limits, and offer an overall seamless way to build credit. Other features include an app to track purchases and credit score, while gamifying the experience to make it fun for anyone to build credit. The ability to send money to friends and P2P micro lending to friends. This is our game changer. Because we've all had our friends purchase lunch or coffee for us and had to pay them back later through Venmo. Why not report this to the credit bureaus and build credit? After all, it is a loan. We are initially targeting the 8.6 million college students that don't have credit cards today. This represents the 43% of college students today. They're all looking for new ways to build credit, and many of these students know people back home that need help building credit. And lastly, our team. Our team consists of a variety of talents that have worked at financial institutions, tech companies, and have started their own startups in the past. But most importantly, we are the customers that we are servicing. We all had bad experiences with credit within the credit system. Even a few within our team have never used a credit card, and all will have their first chance to build credit when we release our alpha in the next month. We also have a group of fintech industry executives who have been guiding us. Scott Goldwaith of Aliasware, Philippe Rocha of Vouch Insurance, Jason Powell of Coinbase, and Duncan Walker of Jebit. Lastly, we currently have a waitlist of 1,000 people, which we are actively growing. And we soon want Sencha to be in the hands of people nationwide, because ultimately, Sencha is empowering anyone to build credit and reach new financial heights. Thank you.
Thank you so much, Christian. Really exciting to learn about Sencha, and congratulations on the early progress. You know, I think we see a lot of people trying to crack this challenge around helping people build credit. And I think what it really speaks to is just how big of a problem and opportunity it is out there. So really exciting to see you all going after it. I'd love to throw it to any of our judges for questions. You know, if maybe Michael, do you want to kick us off?
Sure. Yeah. Thanks, Christian. And yeah, like kudos to you and everything, right, that made you build this, right? I think that's you know, there's such a big opportunity, right, to help so many people around the country, right, around the world, really. The question, I guess, in terms of reaching consumers, what's the go-to-market, and you know, when you think about distribution partners, how do you provide Sencha through them, right? And then yeah, those are the two I'll start with.
Okay, for sure. So our go-to-market is currently, we have a student ambassador program that we're ready to, I guess, start. And so it involves like 50 scouts around college campuses nationwide. And so we're going to implement that, as well as university workshops. I've noticed that I'm a freshman at Boston College. So there's a lot of like clubs that like will integrate certain companies if they have like ambassadors. And so we're going to try to get people to, I guess, speak on our behalf in those like types of clubs and things of that sort. I guess, and then as well as we're going to try to have a referral program. So if you sign up for the wait list, then if you refer that to another person, then you receive a higher spot on the beta, as well as like a type of like a accommodation for that. So an incentive, so like maybe like we ran like a AirPod contest for one time, and try to do stuff like that just so that we can get the product out there. more people. And then, did you ask the second question? Sorry.
That was perfect.
Okay. Perfect.
Thanks. Tim, it looks like you have a question.
I have a lot of questions. This is great.
Thank you.
And I'm sorry that your mother had to go through that journey, right, of having bad credit, and maybe there's a lot of avenue for a lot of people in the United States to build credit. They just don't know how to do it. And the 3-digit number really make or break you, a family as well. To pull this off, it requires a lot. You're going to Alpha next month, but have you found a sponsoring bank? Who's behind the gear? Is it Green Dot? Is it one of the banks?
Yep.
And to get there, it requires a lot of money and time and resources.
For sure.
What's going on there?
So yeah, in terms of that, we have a banking as a service platform. We're partnering with Galileo Instant for the Alpha, and so that's going to be initially like I guess a small target market. We're going to try to distribute the cards and get data and analytics on behalf of that, just to see people like the product. And then from there, obviously, like you said, we're going to have to raise a good amount of money in order to have it in the reserve account. And so, which is why we're going to have to raise like a lot after that.
Yes, you need a lot of money to dance with Galileo. I think they just partner up with Dave App today to power their digital banking platform, but they have a whole different agenda. Yeah, you need to raise at least $5 million to get this thing started, even dance with Galileo. But yeah, good luck to you, man. This is a great product.
Thank you.
Yeah, thank you.
Any questions, Megan?
Yeah, first of all, thank you, Christian. I agree. This is a really exciting product and a huge market and opportunity to, do good here as well. I guess like my question is around, have you thought at all, and this might be, really far in the future, but have you thought at all about like a graduation element of a product? So your product kind of helps people build credit and get started. And then do you see the product evolving to kind of continue to suit those consumers' needs as they, ideally do build credit and maybe, want to have a little bit more options financially?
For sure, yeah. So initially, what we want to do is, I guess, establish that loyalty amongst our users. And so we're going to start off by having that like entryway. So like the guaranteed approval and like the no fees and stuff is what we're trying to do to lure people in, just so that they feel comfortable with our product. And once they establish that, like, I guess, that we're authentic and that loyalty and that trust with us, then we're going to start to implement new products so that we can have like another gateway to other products that we can add into. And so I guess our end goal is to have a suite of credit products that users can use, and we can implement like use a subscription plan for certain things and rewards programs, and just so that like there's a plethora of products that people can use across our platform. Because what we fear is that if people leave our product and go to, I guess, the old banking system or go back to the old credit system, then they're going to be like used and manipulated like they were before. And so we really want them to stay on our product because we feel that we can provide the best outcome for them.
Thank you, Christian. Juan, any quick questions on your side? You're on mute.
No questions from me. Thank you for the pitch, Christian, and best of luck with the solution. I think what you're doing is very interesting and obviously very much needed.
Thank you.
Awesome. And maybe one quick question that came in from the audience, Christian. Outside of that university student connection, are there any other kind of key audiences that you're thinking of targeting in the early days here?
And have you gotten interest from the banks that have a major focus on low to moderate income communities across the country, and like the non-traditional customer for the banking channel, right?
Mm-hmm.
That want to distribute products like this, because it is historically a segment that banks don't serve, right?
Yeah, the underrepresented community, yeah, for sure, like immigrants and
and international students and H-1B holders.
For sure.
They have job at Microsoft. They have no credit. Target those guys.
For sure.
Awesome.
Are those big institutions, like, do you have conversations going with big companies like that want to use Sentia?
So currently our major conversations are with like universities. So like we're going to initiate like white label cards for universities so that we can build that type of relationship. But we haven't had any major conversations with like the banks so far.
Talk to SoFi and Common Bond. This product would be a great feeder to them if you're targeting new to credit students.
Thank you all. Christian, thank you so much for the presentation. It was great learning about Sentia today.
Thank you.
Best of luck.
See you.
Wonderful. And with that, we're ready for our fifth presentation. It's my pleasure to welcome Michael Young from Photon Commerce.
Hi, everyone. My name is Michael Young, and I'm founder and CEO of Photon Commerce. We are an AI technology company based in San Francisco, and we're automating invoicing, payments, and receipts. The problem that we're tackling is that half of B2B payments today are just in the United States are still made via check. And that's $22 trillion of the market for B2B payments. So half of that is 11 trillion. Now, the way that we address that problem is that it's through invoicing. Half of invoices are still either paper or PDF, and receipts, even more, 90% of receipts are still on paper. Invoices and receipts have really rich data down to SKU level data. And when there is a ton of paper and PDFs in the invoicing and supply chain and e-commerce markets, it causes a lot of problems, even for the Amazons, FedExes, Flexports of the world, not to mention also some of the fintech companies too. This amounts to about $120 billion worth of loss in the invoicing and payment industries when it comes to fraud, errors, mistakes, chargebacks as well. This is a real life invoice from one of our customers. They receive paper invoices in the e-commerce space where they have to use a red pen and mark down basically any errors between what they're receiving, what they're paying for, what they're ordering, and what they're actually processing too. So this problem causes not only costs for like operations teams, also really directly affects sales as well as end customers too, when these e-commerce companies are shipping orders like late. So the solution is to enable basically payers in the financial services industry as well as in the e-commerce industry to be able to auto import and then pay these received invoices. So even if there's say a vendor that's not yet on a digital payment platform, we enable payers to import their invoices so they can automatically pay them. After all, payers have a stronger incentive to actually use digital and modern payment methods rather than just vendors as well. What we mean by that is that we're actually seeing, because of COVID, a lot of strong adoption around credit card payments to pay vendors in the B2B space. So why now? E-commerce and logistics, especially through COVID, has accelerated 3 years in just 3 months. This is a direct quote from one of the largest e-commerce companies that we work with. The logistics sector as well has been very slow to modernize, and COVID is catalyzing basically unprecedented growth in digital invoicing and payments. So for payments providers, we provide them explosive B2B customer acquisition because we actually target payers to convert vendors to adopt digital payments methods. For payers, they can get reconciliation to work much faster as well as get rewards too. And for vendors, they can get paid in the fastest possible way. These are some of our competitors that extract data from invoices. In terms of our business model, we do have a free tier, we have an SMB tier, as well as an enterprise tier as well. Currently, we just launched this year. We're used by now over 100 different businesses. We allow them to process documents significantly faster, 2 to 3 times faster, reduce errors 15 to 20%, as well as speed up reconciliation too. Skip that. One of our customers says that we have a solution to their biggest problem, and they're a FBA seller. So we have a strong team. I've exited several companies before, went to the supply chain of Apple. My previous company was backed by Google AI. And one of our teammates was VP of Amazon Fulfillment. So we have a few great investors, and we're looking to raise $3 million on a safe note. Thanks so much.
Michael, thank you so much for introducing us to Photon Commerce. I always love to see some, back end gritty, enterprise procurement SaaS. It's not quite as sexy as a lot of the consumer applications, but boy, is it a huge opportunity and market. So exciting to see what Photon's doing. I'd love to throw it to our judges. Juan, anything to kick us off?
Sure. Thank you, Michael, for your pitch. I guess I just had two quick questions. One, I guess, starting with helping companies with this problem around paper invoices, effectively, a very real problem. I'm curious as to what you see as the natural extensions of this product into other areas of the back office. For some of your customers, and then also, anytime I see, a company say that they're either scanning or collecting data from materials that they receive from their customers, I'm always curious about what they expect to use that data for in the future. I mean, it sounds like there's likely a big data opportunity for you here in the future. I'm just curious if you started to think about what some of those possible use cases could be.
Yeah, absolutely. So SVPs and C-level folks from Visa and MasterCard have said that level 3, basically SKU level data for payments is the holy grail for their industry. Most credit cards and the Marketas and other payments companies, they don't get level 3 data by default. So we've developed a technology that can extract level 3 data and append that to payments, even like post-settlement. And that's attracted a lot of interest from Visa, MasterCard, and First Data. So we signed already a contract with First Data, as well as a number of other fintech leaders too. So to answer your first question, basically payments is an industry ripe for disruption. So we're attacking the payments industry with data and AI.
Great. Any questions from Tim?
Yeah, this is almost solving the last mile issue, right, for payments and receipts. I'm going to show you guys something. You're going to chuckle. A client just walked in today and paid me with cash. I don't even know. I mean, he walked in actually with all the COVID. I don't know why I let him in, but people are still paying cash, if you can believe that, and asked me to sign with a wet pen on the invoice we sent to them. It's incredibly frustrating. I don't know why people are still doing that. But I think the last mile issue is really interesting. I think the granular level, the SKU level information is absolutely needed to be collected and mined, and that information is super powerful. That could be used for, lending, for example. I think this is great. I think attacking this it's a very challenging problem to attack.
On the data, just to follow up, how do you standardize that SKU level data, right? And then I'm also interested to know like the challenges that come right to some of the partners that you have, but then like even the beyond the like the Fiservs and FISs of the world, who this clearly has an implication on as well. How do you think about that?
Yeah, the main ones are Visa, MasterCard, Marketa, FIS, as well as Fiserv / First Data. They are salivating basically over level 3 data, and we have the most granular level 3 data where our AI can harmonize SKUs that we get from receipts and invoices in a deep learning fashion. So that's exactly like our secret sauce, unlocking that SKUs and then creating a whole ontology, a whole catalog of all the SKUs across different merchants, different channels, e-commerce and retail, paper as well as PDF, as well as Amazon. We have now over 800 merchants on Amazon. We get direct Amazon data feeds. from purchases. So that's something that most other retailers.
Is there any, what type of exclusivity, like, is there any exclusivity that you have, and how do you keep exclusivity? And right, is that, to your point, everybody's going in, like, payments is one of the right places for, next couple $1 billion companies probably.
Well, yeah, we're relatively early. We just launched this year. We don't want exclusivity. We want to work with everyone. Obviously later, we can talk further about, later sort of exit strategy and whatnot. And we are working with a number of folks, most of the major data companies as well. We're just signing partnership deals now.
Any questions on your side, Megan?
Nope, I'm good. Thank you, Michael.
Yeah, this is like platform invoices.
Exactly, and receipts. So actual purchase history, not just listings.
That's right. Good luck. Thank you.
Michael, really appreciate you spending some time with us this evening and getting the chance to learn about Photon. Thank you so much.
Thanks for the opportunity.
Wonderful. With that, we will move to our sixth presenting company. It's my pleasure to welcome Mike Trigg from Russell to the virtual stage.
Hi, thanks for that, Alec. My name is Mike Trigg, and I'm the founder and CEO of Russell. So Russell was founded to solve a problem that every one of us can relate to, which is customer service is broken. Over 80% of us today try to self-serve before contacting customer support, but only 9% of us can successfully do so. And this is a huge problem, not just for consumers who get super frustrated, but also for companies who'd much rather have their customers self-serve to cut their customer support costs. So why is self-service so bad? There are literally hundreds of customer relationship management software solutions out there. It's a $48 billion global market. The problem is every product out there is designed for the company, not for the consumer. At Russell, we see this opportunity differently. We basically asked, how would we design customer service from the standpoint of consumers first? And it led us to build something completely different. We started by asking people what most frustrated them about customer service. And the short answer is money. This is why a customer support app is here at a Fintech pitch night. The most urgent customer service needs all relate to money. The average US consumer has 4 credit cards, 2 email addresses, and over $237 of recurring monthly subscriptions. That is a lot to keep track of. And too many businesses make this critical information about cancellations, returns, refunds, et cetera, hard to find. So that's why we built Russell, to get all your customer service and payment information across all your vendors in one place. With Russell, users can find and follow the vendors that they do business with from over 10,000 companies in our database. They can search the knowledge bases of those companies for articles and FAQs that will solve their problems. They can keep track of all their payments and email correspondence with those vendors. And if they need to, they can easily contact the vendor directly through our app via their channel of choice. An MVP of our web and iOS version will launch within the next month. But in the meantime, we've done extensive customer research and market validation. About 70% of people we surveyed had a positive reaction to Russell and said they'd use Russell first before going to the vendor. And in our one-on-one interviews, the key value that people identified is having everything in one place. All their vendors, all their payments, all their emails, all the information they need to solve their problems. So core to our success is an efficient customer acquisition model based on SEO and virality. We've crawled the web and aggregated the top FAQs for the top consumer brands. From this, we're programmatically generating pages that are vendor specific and topic specific that consumers search for most frequently. Consumers can then, after they land on that page, contribute their upvotes, comments, etc., and create a Russell account with one click. We see several ways to monetize this platform in this consumer usage, including a monthly subscription. Over half our survey respondents indicated a willingness to pay an average of $8 a month. We also plan to introduce a Russell Pay card that would allow users to generate different 16-digit virtual numbers for different vendors and enable us to share that 3% merchant fee with the card issuing partner. We also plan to test a task for hire offering like TaskRabbit for customer support, hiring gig workers to perform various customer support related tasks. We'll also monetize the company side of our network. So companies can claim their profile page on Russell, much as they would on Yelp or Glassdoor, to curate that user experience. They can also integrate Russell to their enterprise CRM system to manage cases directly through the Russell app. So this is a big, ambitious vision, but we've got the team and the expertise to get it done. I started my career on one of the first web-based customer support apps at Epiphany. I've also managed large consumer sites like High5 and YouSendIt, both of which grew organically. My co-founders lead our product and design and CTO technology leadership. And we also have a very cost-efficient development model with a highly skilled offshore development team based in Medellin, Colombia. So that is Russell in 4 minutes. We're in the process of raising a $1 million seed round, pre-seed round, I should say, and you can check us out at russell.co. With that, I'm happy to answer any questions that you have.
Thanks a ton, Mike. And, really, really interesting concept that you're going after there with Russell, and excited to see it hit the market. I'd love to throw it over to our judges to start any questions. Anyone want to kick us off?
I'm happy to. Mike, thanks for the pitch. Certainly, as Alec mentioned, a very interesting solution to the big problem of customer service and support that every company deals with, and every consumer deals with as well. I guess I'm curious on the model. It sounds like you've gotten some positive feedback from consumers that they'd be willing to pay for a solution like this. I suppose but I am glad that you're looking at some other monetization channels, because I think consumers can tend to be a little bit fickle as it relates to things like this. But I guess I'm just curious, how do you think about pricing for? You mentioned that the consumers, you were thinking kind of $8 a month would be fine. But how do you feel like pricing it versus the value that's actually being created here, both for the consumer and for the company? How do you think about pricing of the solution for both of those customers?
So obviously it's a freemium model, and that's what we'll be testing, is what paywalls sort of get the best conversion. A lot of the users will use it for free, but almost every user we've spoken to has talked about a situation where they had a recurring charge on their credit card that they never noticed, and it rang up hundreds of dollars, in fees. And so keeping track of that has tremendous value for people. But it's not just about cancellations. It's about managing your overall relationships, taking customer support out of the email channel and into a purpose-built app. You see people on Google, on Twitter, commenting and sharing feedback and discussion forums and Quora and stuff like that. We want to aggregate all that activity that's happening on the open web and put it into this sort of purpose-built platform.
No, very helpful. Tim, it looked like you might have had a question there.
I think the monetization model is interesting. If I wouldn't charge the customers for this service, it should be free. I want to say that it should be sort of pushed back to the vendors, right, to help them alleviate all these, to help them alleviate all of this phone trees and call center staff and all of that.
Right.
Give them a credit card. I thought it was interesting, but I probably wouldn't. No offense, I probably wouldn't sign up for a Russell credit card. But I think companies spend tons of money retaining customers. I think the data set you'll be collecting will be a gold mine for brand loyalty, convincing one from switching from Disney Plus to Netflix. All of that information is very juicy. I feel like that is just a gold mine.
That's really our goal as we onboard a new user, is to help them build out what we call their vendor graph. It's just like your friend graph on a social network, right? So what are all the brands and businesses that you work with, help you keep track of all the communications with them, all your charges with them, all the social media posts that they might add.
That's huge.
Their privacy policy, whatever. It's almost like crowdsourcing all that stuff. And as you say, as you know the vendor graph, you can start to make some interesting decisions and recommendations about, other products they might want to try.
That's right.
To vendors
That's right.
Today, et cetera.
And last bit, an anagram for Russell is result, which I thought it was a nice touch.
You are the first person I've talked to who picked that up in our name. That is 100% correct. It is an anagram.
Anything from you, Megan?
Yeah. Thank you, Mike, for that. I guess you started to get into this a little bit, but just to kind of ask more explicitly and see if there's anything else. I think I see very clearly why someone would need this product. I think we've all had those types of experiences where we're so frustrated and the internet sometimes is terrible and companies try to hide answers to questions that they don't want you to see. So I think that is really, I definitely see the initial use case. What would be your strategy for keeping users continually engaged in this product, especially given that it is like in your model right now, it is a recurring monthly charge. So I think that consumers would need to keep getting use out of it on an ongoing basis once they set everything up and once they answer their initial burning query.
Yeah, that's a great question. So I don't have a slide on competitive in here, but if I did, it would show you sort of how we see the market. The arbitrage that we see is that we can get users on very light touch, low commitment stuff. They search for a term, they land on one of our pages, right? So like other ratings and reviews sites like Quora, answers.com, Reddit, et cetera, where you get them on that specific topic at high activation, but low commitment, right? Then we migrate them into something that really looks almost more like a personal finance or budgeting app, right? And in that world, you have high cost acquisition, budgeting sort of like dieting. Everybody knows they should do it, but they put it off and they fall off the wagon really quickly. And so we want to take that high activation of the customer support urgency use case and get you onboarded with all the vendors you're using. And I think that's what will create that compelling ongoing usage is as we build out our database of businesses to hundreds of thousands, millions of businesses, you'll be able to keep track of everything you're doing across all your cards, across all your vendors. And that really is a daily, if not multi-times a day use case.
Any questions on your side, Mike?
No, this was great. Thanks for including us and inviting us.
Well, and in fact, I was throwing that to our other Michael.
I'm sorry.
We have a lot of Michaels tonight.
As usual, there's too many mics.
All good. No, thanks, Mike.
And I just wanted to throw one question that we received from the audience, and I think it's related to some of the themes that have come up here, which is of these three different monetization models, which is the one that you're most excited about kind of over the long term, really building your defensible moat around?
The most obvious one is the subscription because it's sort of most proven, but I think the one I'm most excited about is actually the Russell Pay card. Users got incredibly excited about that. They didn't really think about it as a credit card per se. They thought about it as a new payment mechanism. And the control that it would give them to have one account that could have a different 16-digit number for every vendor they deal with lit people up. They could sign up for trials without worrying about it converting and billing them. They could cancel services by just killing a card number and not have to fumble around with the arcane ways that companies make you jump through to cancel a service. And that also opens up that gig worker use case where you could hire out with those virtual cards. You could hire somebody to do tasks on your behalf, make payments, get refunds, whatever it might be, without worrying about compromising your real credit card.
Mike, did the initial test you did said 271 users?
Yeah, the survey was about 200. We aimed for 250. I think we got 270, something like that.
Is there how do you take it? What's the next trial and user to get a scale of maybe even beyond just one geography that you might have done it in?
Well, the next step for us is really, pre-launch, beta release of the product and get first, party hands-on usage of the product. So we're eager to do that and, are looking to do this pre-seed round to really give ourselves runway to prove it out, get the user metrics where we want them to be, and scale this up.
Thanks.
Thank you, Michael, and thanks a lot, Mike. Great learning about Russell here, and certainly something I imagine a lot of consumers are going to be playing around with in the coming months. Thank you for joining us. With that, we are ready for our 7th presenter tonight. It's my pleasure to welcome Aaron Huang from ProductFi.
All right, thanks everyone. Can you see my screen?
Not yet, but here, try sharing again. I think we had a moment of technical difficulty.
Okay, let's see.
Looking good. The floor is yours.
All right, well, thank you everyone. My name is Aaron and I'm with ProductFi. ProductFi is a fintech platform that embeds fintech products to help any fintech or company that is looking to launch a fintech product to market in as little as 3 weeks. And really, we started this company about 2 years ago. Thematically, this is a pretty hot topic now, but in the past, what we did observe was that larger companies, the Apples, the Lyfts, the Oracles of the world, were essentially launching cards. And we really asked ourselves, where is this movement going? And so what we started to do was basically think about this. Obviously now there's some market validation, but we thought about what would it look like if every company in the world that wanted to launch a financial product could actually do so. Today, there's obviously close to 37,000 companies building fintech apps. There's actually a much larger market in terms of what we call tech fins, which is just any company out there that has an idea, the Accenture's of the world, that want to basically launch a company and a product to market. And so how do we basically enable that? Today, there are certainly solutions. Anyone that's actually been in fintech or built a fintech system before, the team at ProductFi has actually built 1.0 systems pre-Robinhood, insurtech platforms that plugged into counterparties that are even older than fintech's financial counterparties, which is in the health insurance space. So we have a lot of experience building not just infrastructure, but also thinking about how we enable very elegant end user experiences. And so we really want to do, our vision is really to be the Twilio, the Okta, the Stripe for the fintech ecosystem, and to make it that easy to essentially embed a module and go to market. And what we're really doing is we're building twofold, 2 pieces of what we'll call Rails. Number 1 is around the technology. One of the early systems that we built, and this is one thing that we actually innovated on for over 2 years, was essentially a flexible general ledger. One thing we knew that we would need to basically power things like rewards programs, handle just-in-time funding. We knew we needed data aggregation, enrichment, security, all the requisite pieces that we call undifferentiated products today, but are essential to allowing innovators to really build what they really specialize in and get to market faster. We've integrated things like payments, card issuance. And if you ask about sort of the Swiss Army knife, the question is, what can you use the Swiss Army knife for today? What we're focused on is from a stacking function, payments, integrated KYC and account verification really is the anchor point to launch a lot of products to market today for fintech. One of the other things, as we'll talk about it later, is really better card issuance. So as I mentioned earlier, the Brexes of the world, how do you enable that for more companies? Arguably for us, what we want to do is not really enable Goldman Sachs to launch Marcus. They clearly have the resources for it, but how do we unlock what we call the long tail of fintech innovation that today has barriers around banking, technology, compliance? How do we basically reduce each step of friction along the way to market for early stage fintechs? And really, this is a bit of an octopus slide, but what I really want to say here is that there's a lot below the layers and above the layers of what we're building. Really, from a technology standpoint, the architecture philosophically and from a design perspective is interoperable with multiple banking partners that specialize in use cases, and it also is easy enough essentially to be pulled out and embedded within a user's code base. Our team has a deep wealth of experience. They're all fintech operators. folks that come from Lending Club, that come from early companies like Motif Investing. Our advisors and investors are also deeply in the space. We have bank partners. Again, we have folks like Yodlee that we actually went through their incubator from. And we also have folks like Maya at Chime Bank that have been giving us advice in terms of go-to-market. So we have a pretty robust team that surround us. And obviously, finally, we have seen investment from folks at Point72 Ventures. One of the folks there actually was the old Chief Product Officer, Marquetta, and is obviously advising us in terms of a channel strategy, in terms of how to penetrate the SMB market. And so really, to kind of wrap this up, one of the main missions that we have when we say to change things and transform the way folks build for good is not only to alter the way that the infrastructure looks, but to basically allow a lot of fintechs that want to fundamentally broaden access and democratize access to the financial system to allow them to go to market in a seamless way. And we are very much aligned around that mission. So thank you.
Thank you very much, Aaron. Really, really exciting approach to enabling, the democratization of fintech, and it's so exciting to watch everyone become, a fintech company at some layer and start understanding how financial services are relevant to their business. I'd love to bring it to our judges. Maybe Megan, do you want to start us off?
Sure. Yeah, thank you, Aaron. I agree. I think this is so exciting. I definitely know firsthand how much overhead and kind of, these big clunky things you need to get set up just to enter the game at a lot of these fintech companies. So I think that what you're doing is really exciting. I guess I would love to dig into a little bit more what you mentioned at the end there. So what would you what would your partner strategy look like? And how do you kind of foresee moving forward with that channel?
Yeah, absolutely. I think just alluding to both the partners that we have now, as well as some of the strategic investors, a lot of the challenges with larger enterprise fintech vendors in the space has been traditionally, how do we actually tap the long tail? We just talked earlier about Galileo. I remember they have a $5 million minimum for reserve. There are definitely challenges both in the funding, the reserve mechanisms, and also the go-to-market. From a purely infrastructure level, I think a lot of the players in the space see us essentially as a channel partner for them. Every single large fintech vendor out there is essentially asking, where's the next Brex going to come from? Well, they're not going to come from, the mid-market and immediately have 1 million users. They're basically going to start from 0 to 500, and 500 to 50,000. And so that is essentially the channel partnerships that we see as well, which is if we can basically allow and aggregate our long tail, we can essentially serve them, they can serve us, and vice versa.
Thank you, Aaron. Question from Tim?
No, I think this is great, Aaron. I think building fintech products for a lot of these, middle market companies could be $2 to $5 million, 2 to 3 years, and it may or may not work, right? Instead of burning that precious round A money on building technology, which, like you said, could be commoditized and not differentiated anymore, right? Really,
right.
It's save that for really cater to what they need to build. It's a brilliant idea. My question is, don't take this the wrong way. You probably don't need, funding. You got Point72 and some of the other pretty well-known investors on there. What are you looking for from this group?
Yeah, I mean, really, we are looking for domain experts that we can partner with. We're always looking for additional funding partners. Tim, as you know, and I'm very mindful of this as well, technology is one piece. And I always tell people, I've been in tech for 15 years. Technology doesn't solve the world's problems by itself, right? We need domain experts. We need the right financial institutions. Anyone that's played in this space knows that even if there's 1,000 banks in the US or 10,000, culturally and also philosophically, there are only a handful that really can meet you at that knife's edge in order to operate. And we know that there are certain banks and players out there that have successful relationships. And so the key to unlocking this market is not just the fintechs and the platforms like ProductFi, it's fintechs, platforms, and FIs. And the FIs are really the ones that, are gradually going to become involved. But really, from our standpoint, we are actually the ones in many cases driving the program for the FIs because they're willing to basically collaborate. But they're like, well, why don't you guys give us a framework? Because we have a framework that kind of works, right? But your framework is one that we need to think about and adopt. And so really the key to unlocking all this is how to basically instantiate the framework from platform and fintech into the traditional paradigm and basically make it all work together. Internationally, we've also been having discussions around this. And there are clear opportunities in Southeast Asia. There are clear opportunities in Africa and Europe. But the regulatory environments of all those markets are ones that we are assessing. And really, from my standpoint, I am one to basically surround ourselves with the right folks so we can just have good conversations with around this. So
wonderful. Anything from you, Juan?
Sure. Real quick, and Aaron, thanks for the pitch. Really interesting product. And you guys have definitely hit on something that could be very big. I guess on the traction side, it looks like you guys have a couple of customers that you're working with already. Have they actually launched products thus far using your platform to build the products? And I guess what did you guys learn from those experiences?
Yeah, that's a great question. I got the tagline launch in as little as 3 weeks from one of the clients that we launched in as little as 3 weeks. Now, we've learned a lot about certain, when you talk about early stage product market fit, you don't want to be too early, but you don't want to be too late, right? And so there's definitely a calibration of finding that sweet spot as a company that wants to monetize the long tail. And what we've been learning through that experience is not necessarily sort of disqualifying people immediately, but essentially having the conversations around like, well, what are the blockers for you? If you had all these things taken care of, what are the next blockers? I think the woman at Brex mentioned this very well, which is if you understand where the market is and if there's not a solution for it yet, and they're coming to you for that solution, that's essentially where the market is going to be in 12 months, 6 months, 12 months, 18 months. And that sense of trajectory really does align very well with our go-to-market and our roadmap in terms of the things that we want to build for arguably what we feel like is the larger market of fintechs that we work with. So.
Thank you. And any final questions, Michael? Awesome. Well, Aaron, we cannot thank you enough for spending time with us. It's super exciting to learn about ProductFi. And I know certainly in the OneValley community, we have such a huge ecosystem of fintech startups and startups that are touching on commerce that we'd love to learn how to make sure that they're able to understand ProductFi and work alongside you all. So it's great to discover the work you're doing.
Thank you. I'd be truly grateful for that network. So thank you so much.
Wonderful. Now, last but not least, we are ready for our final presenter. It is my pleasure to welcome Christina Chi from Data Bento to the virtual stage.
Hey everyone, it's a pleasure to be here and thanks for staying for so long to hear the final presentation of the night. I promise not to make you guys fall asleep. So I'm Christina Chi, I'm the CEO of Data Bento. We are the first market data retailer in the world and I will explain what that is. So my background is that I come from the hedge fund industry and one of the biggest challenges we faced was instead of I was a quant researcher, instead of trading and managing a team and launching our fund, I spent over half of my time just wrangling with data vendors and trying our best to get data. And so I'm going to explain the current state of financial data right now. It's probably not a surprise to you, but it's a really slow process. So it took us 3 to 12 months to onboard any new data set with all of these different vendors. We used over a dozen vendors over the span of a decade and weren't really happy with any of them because of how long it took to inquire, to call and propose and negotiate all these deals. And so it felt like a really black box process. On top of that, because I look like a kid, sometimes the salespeople would kind of gatekeep a little bit, like they thought we didn't have any money or thought that, we weren't a prospect, a good customer. And so it took us a while to be able to convince them that we were a viable customer of theirs. And so a lot of information was just hidden behind paywalls. We couldn't even get pricing or really preview any of that data. And also the licensing process was really complex. We didn't really know what we were signing onto. And then on top of that, because right now all the data vendors in the world, whether you're a startup or a large firm, it's all completely sold wholesale. So it's like, imagine going to the grocery store and they force you to buy the entire grocery store instead of like, you just want dinner for the night. And so a lot of the data just goes to waste. And thus there's such a low customer satisfaction across the industry, not just for us as well. And so in 2019, I actually left the company, the hedge fund, to start Data Bento with 4 of my colleagues as well. So in this industry, for those of you who aren't familiar with data, there's Yahoo Finance on like the very retail side of things, which is cheap and free, but really low quality. And then there's the Bloomberg Terminal, which is like super institutional gold standard. And there's a $22 billion market opportunity right in the middle there, which is what we're aiming at, which is providing basically the highest quality data, but at retail prices. So basically for Data Bento, we created basically nanosecond resolution data from direct sources, so various market exchanges and other sources like that. And then the uniqueness that we have is that we have algorithms that can monetize any data set pretty much instantly, whatever you want, in smaller pieces. And what that equals is basically we can sell data to any customer a la carte, so give them exactly the data they need without the rest of the data that they don't want, and then also be able to automate and unify the entire licensing and delivery process. And so what that basically equates to for us is back when we were using the Bloomberg Terminal, for instance, it took us 10 months to onboard with Bloomberg and also learn the language. And if you guys ever worked in finance, you know what that's like. It takes a really long time to do so for any analyst who joins a company. So for Data Bento, we shortened that from months to minutes. So an analyst can literally instantly log in, explore data without the paywall, preview and add to cart. And then our system, we have a screenshot there of what it's like in terms of the licensing process. We actually explain it to you in simple terms and then populate everything automatically so you can e-sign at the very end. So it's literally, you just get everything you need within minutes. And that basically has, for us, led to better product market fit, not just between us and our customers, but also our customers and the data, so that they end up using the data more and coming back to explore our platform a lot more frequently. In terms of traction, so we have 1,500 plus signups from different customers, and they're all mostly companies. We try to exclude, the students from this list, although they do sign up as well. We spent $0 on marketing so far, and then we do have a really high referral rate. Those are just some of the largest companies that have signed up so far. It just goes to show that this is still a hair on fire problem in this industry, and that people are always looking for new data sets and just need it instantly. So. I guess we do have a couple of pilot stories. They're relatively similar. We worked with Putnam through Mass Challenge. My time is actually up. But anyway, so just happy to just post all this stuff here and answer any questions that you guys might have.
Thank you so much, Christina, and we appreciate you watching time. I'm sure we could hear about the Data Bento story for a while now, but really exciting progress to date, and a really interesting approach. I love the concept of data market fit. And kind of data customer fit, and actually focusing on value there. So I'd love to throw it over to our judges for any questions. I kind of feel obligated to give this first one to Michael, because this is right up his wheelhouse.
Hey, Christina.
Hey, Michael,
so just I know we've talked about this in the past, but since we talked last, the platform players and the even players like AWS, right, who have gone into the data marketplace strategy to help big institutions and anybody honestly consume and easily get data, right, to solve that problem that is crazy that it still exists. But how do you think about that competitive piece with those providers, and then even the market data providers themselves?
Yeah, absolutely. So our biggest competitors are Bloomberg and Reuters, and they're they can't change their business model because they've always sold like this bulky terminal, right? And so for us, because we're offering it completely a la carte, it is a completely different business model altogether, and we do attract a different audience. It's very bottom up compared to Bloomberg and Reuters, which is very top down. And so with our users, we actually noticed a lot of them, like Putnam, they're never gonna, they have 100 different data vendors, right? But what's useful for us is we fit a different niche with them, where where if a team, especially the teams there where they want to explore new data sets, that's when they come to us and, have that need. Or for Natixis, when Bloomberg is down, for instance, and they need basically another data set to come in and help pilot to run their data and stuff, we come in at the right timing. And so the way that we're structured is just a lot more friendly towards their changing business models, I guess. So that's probably the biggest.
How do you predict profitability and revenue through that model of, I need it today, I don't need it tomorrow, maybe I need it in a month?
So the core bulk of our users actually are quant traders who use the data on a daily basis. It's live data streams. So for those guys, the top 10 users we have, for instance, it's about $1 million ARR just with the top 10 of those signups we got from the quant traders. So we really kind of niche with quants, partially because of my own background as a quant, I guess. But yeah, so that's probably the biggest reason why, I guess, that they also have a lot of money. So it's a win-win.
Thanks.
Yep.
Wonderful. Would love to throw it over to Juan. Do you have any questions?
Sure. Just one quick one, and thank you, Christina. Actually, having worked for a hedge fund in my past career, I understand this challenge as well. I'm curious. You obviously you mentioned a couple of the large competitors here, Reuters and Bloomberg particularly for the hedge fund industry. But I'm curious, what data sets are you getting your hands on that aren't available via Bloomberg, or are you seeing some of the same data sets, and because you're more flexible in the way you provide them, you can potentially get customers to come to you instead of going to Bloomberg?
That's such a good question, Juan. So we're the only vendor that has high frequency quality data, I guess, and that does attract quants again at the end of the day. But there are some users we do have that aren't quant and still want the data anyway, in a customized format, whether it's just daily or monthly data. Stuff like that. And for those people, I guess the biggest difference is you're absolutely right. It's about the experience. So a good analogy is like pill pack, where we're not inventing the pill. So we're not inventing data, but we're just providing a better data experience for these people who may not have been able to access data in the past as easily. So that's a big use case as well for some of the users. Yeah.
Wonderful. Any question on your side, Megan?
Yeah, just kind of building off that last point that you made, Christina. I guess as you start to think about who is initially finding traction with your product, you have the quants, and then you have some other groups of companies as well. Do you foresee those needs continuing to overlap, or do you think you're going to need to continue to diversify the product to kind of meet the individual needs for each of those different segments?
Thanks, Megan, for your question. So actually the value of the moat that we've actually established is actually in our technology, which is that we've built algorithms to be able to price pretty much any piece of data out there. And so absolutely that's applicable to other industries as well. So we've pitched to Novartis, for instance, where they have a lot of lab data lying around and they're like, what's the value of our lab data? Can we monetize it with financial firms one day? And so we do plan on expanding our platform in a unique vertical like that one day. It's just that today, because I'm a quant, it's a very natural fit right now for our initial market, I guess, segment to target the financial industry right now. So absolutely, though, in the future, that's going to be kind of other verticals that we can go into.
Any questions from you, Tim?
No, I'm not on that side of the market, but I can certainly appreciate this thing. It almost reminds me of that tool. Is it Alpha Wolfram?
Wolfram Alpha.
Right? You type something in there, it actually gives you some equations. I feel like this is a pretty robust a piece of software, and it should be data agnostic.
Thanks, Timothy.
Could be used in a lot of fields. Thank you.
And we had one question from the audience I wanted to get in. The incredibly impressive early referral traction that certainly speaks to the problem that you're solving in the market. When you do start trying to scale marketing, what is that going to look like, and how are you thinking of driving adoption?
Oh man, that's such a tough question, actually, because for the marketing, because we haven't spent a single dollar on marketing so far, we do plan on doing more kind of broader marketing. Right now, all of our, it's completely inbound. So we do content creation on how to use data better, how to use data applications like starting a hedge fund, for instance, or other businesses like that. But in the future, we do plan on doing kind of more broader stuff, like, for instance, I don't know, I'm trying to think of like maybe going to more events or doing more like larger PR so that we can really reach a bigger audience that I don't have access to. So, but yeah, that's going to be the focus moving forward.
Well, wonderful. Christina, thank you so much for spending time with us this evening. I think everyone's very glad that they waited throughout all the pitches to hear that last one. And, really exciting work you're doing, kind of rethinking how people access financial data. So thank you again.
Thank you.
Well, wonderful. We had, as I promised, 8 really great pitches from early stage fintech companies doing really, really exciting work. I think we are all honored and had a great pleasure of having them here tonight. And want to give a special thanks to all of our founders who presented and shared their vision for how they're going to transform their industry. I want to give another special thanks to our judges, Michael, Tim, Megan, and Juan, for great questions and engagement throughout the night. It was really enjoyable kind of seeing the different perspectives that you brought to the conversation. And, as always, want to thank our supporting partners that make our events like this possible, helping us source and reach all these great founders across the country and across the globe. And as always, a special thank you to our friends at Brex, both for participating this evening and being a consistent partner and sponsor of the Passport ecosystem as we work together to help early stage startups get the resources that they need to grow. We're now going to take a couple minutes, tally up the scores, figure out exactly who has won. If you haven't voted for your favorite yet as an audience member, now is your last chance to do that. But we will be back in a couple moments to tell you who the winning teams are. And just, bear with us for 3 to 4 minutes as we get everything figured out. Thanks again. Good evening, everyone, again, and thank you for bearing with us as we tallied all those scores up. I'm really excited to say that we have a winner to announce, both a grand prize winner from tonight, as well as an Audience Choice Award winner. Again, 8 amazing pitches. Every single one of these presenters, if we could give them an award, we definitely would, because they're all doing really exciting work. But unfortunately, we have to crown a grand prize, only one grand prize winner and an Audience Award winner. So with that, without further ado, we are going to start with our People's Choice Award, who was the most popular amongst the audience voters who participated, and will be winning $500 as a fun gift from us for their great presentation. It is my pleasure to announce that Data Bento is the winner of the People's Choice Award. So it looks like there were a lot of our audience that were happy that they lasted out and waited till that final presentation and heard from Christina and the amazing work that's happening at Data Bento. And finally, our grand prize winner, which will receive $2,000 cash, as well as free access to the OneValley Passport ecosystem and membership at our innovation centers, is ProductFi. Congratulations to Aaron and the ProductFi team on just an incredible presentation, a really great business that they're building there to enable fintech companies across the globe to get to market and impact users. I'd love to invite Aaron, if you're with us, you can turn your video on, unmute. Congratulations.
No, thank you, everyone. I mean, I think that.
I think you might be muted. Oh.
Can you hear me?
Yeah, we can hear him just fine.
Okay.
Well, I'm sorry that we can't get your audio on right now.
Can you guys hear me?
I can hear you, Aaron.
Yeah, I think it's just a technical difficulty on my side. My apologies, Aaron.
Okay. Yeah, no, I mean, it's a big, hairy, audacious goal. I think a lot of folks on our team that have been in multiple iterations of startups and companies with us know that it's a big, hairy, audacious goal, and we are excited to be on the mission. And we are obviously, there's no compunction that it is going to be challenging, but I think we have the right philosophy. We have the right experts, and hopefully we can build the right network. So thank you so much.
No, it's a true pleasure to have you here and to learn about the work you're doing. Congratulations again.
Thank you.
And with that, I want to thank all of our judges, all of our audience, all of our presenting companies for participating. And as a reminder, you can engage with the Passport and OneValley ecosystem anytime, anywhere. We'd love any of founders to come and check out Passport. You can sign up for a free account to explore, or if you're a US-based startup, look at the Brex Scholarship for easy access to the ecosystem and the resources that we provide. And of course, if you're an audience member who wants to connect with one of these startups, don't forget to request an introduction through the startups profile on the page that you all are looking at right now. Thank you all again. It was great having our FinTech pitch night, and can't wait to see you, can't wait to see you in the new year with our next pitch series. Thanks again.